Hey patrons, just wanted to do a, I don't know, out of the box kind of video. I think I did it once on stream before, but I just thought, hey man, this might be a good idea for new people, like people that are actually pretty new to any market. Okay, patterns that exist out there, there are a lot of them, and just wanted to do, I've been when I do Jeopardy or whatever for the sake of education, I'll like screenshot real images of these patterns and I haven't really done much with them. So just wanted to, in this video, again, this is exclusive for patrons. Like, we're gonna look at just a few patterns, right? And if you're interested in a pattern, and I don't cover it, I mean, I'm probably not gonna cover these very deep, right? So, but at least it'll help you be like, oh, hey, I like this pattern. I want to look more into it. I'll research into it, or I'll buy a book by Bulkowski, right? All these patterns can be found in Thomas Bulkowski's book, The Encyclopedia of Chart Patterns, second edition. All right, so anyway, I guess we can get it rock and rolling. Again, want to be pretty quick here. All right, ascending broadening wedge, right? Two diverging upsloping trend lines with your top trend line being its ascent is steeper than the bottom. That's like a characteristic of it. Normally Bulkowski wants 3 touch points on each side, so this may not even have been the best example of one. This was just Litecoin seeing it. All right, 1, 2, 3, and 4 on the top. We sold off here. We just kept going, man. It's Litecoin earlier this year. Okay, and then like the inverse of this is the descending broadening wedge, whatever. Ascending scallop, not very reliable patterns according to Bulkowski. They don't do very well, but pretty much the way you wait, right? It's like this, it's a scallop, right? So it's like an inverse J pattern, all right? And like wherever the J started, like you can see gap fills here, you can break this and wait for the breakout. Look, we had a false breakout. We flagged though. It was like a bull flag too. So like the confirmation level is the top of the J wherever it starts. And you can imagine in crypto, maybe we don't have a gap here. Maybe we just, this is a swing high, right? And the scallop starts here, right? Because there are no, again, unless you're talking about futures. So pattern not very reliable. You don't see them that often. And even if you do, they're not that great. I mean, Bulkowski talks about these all the time, just being terrible, like performers. So you may not even look at these. Like, again, this could have arguably just been a bull flag, right? So ascending triangle, right? We've talked about this one a billion times, right? If you've been watching it all for the year 2019, this is like, this pattern has been legendary. I mean, like, that's how it all started. Bitcoin broke out at 4,200, broke the wall, right? There's a horizontal line, the characteristics of the ascending triangle, the horizontal line, which is a sell wall, and then accumulation, which is the higher lows, right? You keep making higher lows, but you keep hitting a sell wall. But every time you hit the sell wall, you sell off. But again, more and more people are getting in on the boat. This was Bitcoin back in 2015. This is what ushered in. This was right after, on the tail end of a 8-month long no trend, horizontal trend. We broke out of it, back tested it, and then we created this pattern. And this led us from 2015 all the way to pretty much $20,000. Okay, this is this pattern right here. So the trend just continued on for years until the Great FOMO of 2017. All right, so yeah, man, really reliable, good pattern right here. All right, there's a lot behind it. Broadening top pattern. This is another Bitcoin example. Yeah, man, it's just 2 diverging trend lines, right? Not to be confused with the descending or ascending broadening wedge, where both are downsloping or both are upsloping, right? This one has 1 downsloping, 1 upsloping, okay? And it is inherently a broadening top. It's inherently a bullish continuation pattern. So you could think of this almost like a flag, like a bull flag, all right? So your price action starts contracted, then it starts diverging apart, and then you could break out of it to the upside. And really how you measure is from the widest areas of the pattern, right? So from this point to this point, really, you can see we rejected it. So that's the widest part, and we measured it, and it was beautiful, man. It hit perfectly. Not one candle closed above the measure move, and then after that was the huge sell-off that lasted like an entire month. Like August was terrible. Okay, so good bullish continuation pattern, the broadening top. The bull flag, I mean, this one's standard, right? You have an impulse up, and then you retrace between 23.6% and 38.2% of the way, for the most part. You slightly down slope, and it's just really to reset your oscillators, your RSI, your MACD, and you run again. Very nice pattern that we see all the time. Okay. very simple too. And you start with bull pull, then bull flag, and you measure really the tallest part where the impulse started all the way to the top of the candle close for the flag. That's how you measure, right? Use your measuring tool from the breakout as your measurement, right? That's how you get a target up there. Okay. Oops, sorry. Garley, whatever, sorry. This is just like a thing, dead cat bounce. Really, it's just people just the price gets pushed down and it rallies back up, so people have the opportunity to get out. That's all it is, man. It's like pretty much it's a trap. It's like a bear trap before the rally, before you dump again, and this thing just kept selling off way after this. Okay, so I mean, it's just zoomed in here out of context. All right, I think this was Bitcoin, and I think this was back like, I think this was like, I remember 6K or something like that, before we rallied like thousands and thousands of dollars, before then just bleeding out for the course of like a year after. So descending triangle, you know, it's the opposite of an ascending triangle. Still a very reliable, good pattern that tells you a lot. I mean, psychology of the buyers and sellers. There is a buy wall propping the price up. Okay, normally an institution. All right, and a lot of times they were in on the pump before it, right? So they're propping up the price so at higher prices they can continue offloading their shares or their S coins in this situation. This was BCN. Oh my God. All right, and they prop the price up as to not create a panic and a cascade effect of just like panic selling, so they're able to quietly get out of this crap after the pump, right? So once you break the support, this just kept going and going and going and going until eventually BCN got literally delisted. Hilarious. Okay, your diamond bottom pattern. These can act as reversals or continuations. All right, it's the warring between buyers and sellers, right? Your price action starts as like a broadening bottom pattern, right? Where it's the megaphone, the two diverging trend lines. We just looked at that. Broadening top, this would be like broadening bottom stuff. But then something happens where we, you know, and this is a little off, right? I mean, you know, I probably plotted this on the daily, but as you can see, touch point 1 and 2 and 3 on the top, on the bottom right here. And the rule is you need to have 2 touch points per trend line, right? So you have like 3 here on the bottom left. There's 4 different trend lines, right? 2 up here, 1 and 2, then 1, 2, and 3 here, and then 1 and 2 and 3 on the bottom, right? So that is a must. You have to have that, otherwise it's not valid, right? So you can't even draw a trend line without 2 anchor points. That's like a rule too. Okay, so you had a crazy false breakout. This is extremely bearish conditions. This was like SCC a coin crap. All right, and a terrible bear market. This was back in 2018, so you know how bad it was. Had a false breakout only to hit the 200 moving average, completely bearishly engulfed, and then look what happened. You just kept dumping miserably over and over and over. So in a bear trend, this is testament to like if the market is extremely bearish, man, and it might look promising for a long position, it might be better to just not take a position, even though it might look like a bullish setup, because this crap happens. You know, stop losses are going to protect you, but dude, this thing was selling off because Bitcoin was getting destroyed too in a bear market, right? So the macro was real bad. So when the macro is real bad and the S-coin market is real bad and bearish, right? Trading bullish patterns is catching falling knives a lot of times, okay? All right. Diamond bottom. Double bottom, man, all right? You have a left bottom and a right bottom, and you have one peak that gives you the discernibility between the two bottoms, right? And all this is pretty much extreme amounts of market, and we have more extreme versions of this, like the triple bottom, but the double bottom is just confirmation to the market that the bottom is in temporarily, at least for now. Okay, that's all it is. And so what you look for on the right bottom, the second bottom, is bullish divergence on your oscillators, right? You get it. You always, all these patterns, man, you're wanting to line up your other variables. Do they match up? Are they also saying we're going to go to the upside with the bullishness, right, of the pattern? That will give you if they do line up, you have a stronger chance of being right. That's all it's about, being right. And you're not going to be right every time, and things are going to look extremely bullish sometimes and perfect, all the stars align, and it still doesn't work out. But that's okay, because you're playing the numbers game, and the more you practice discipline of looking for the right things at the right time, you know, coinciding variables, I'm telling you, man, you will win, because you're It's not about how many times you win in trading. It's about how much you get paid when you're right. Okay, and that's why we have low risk, high reward opportunities. Okay. So double bottom, very easy. You measure from like, I mean, I use it like the candle close, man. I don't know, candle close to the top. Like it's more, a little bit more conservative of measured move. And so like if you use the wicks, it makes sometimes you know how wicks can be. They can be crazy. So if you measure the wick, you might be off on your measured move. So I just go candle close to the top. I don't care if there's a wick there. So candle close to wherever the top is, the resistance. You measure that part from the breakout, and that's what gives you your measured move, right? Okay, so double bottoms are great. We've been seeing a lot of them lately in this market. There's a beautiful one. This is ONT. Oh my God, it's so wonderful. So wonderful of a pattern. Atom and atom. All right, something about your double bottoms is if you have, hold on, I wish I had my browser hooked up on my, I'll get that, make this a lot easier next time. You know, remember when you have, people are like, if you're new, I guess, you'll hear Adam and Eve, and you'll be like, what is Adam and Eve? It's like, okay, so Adam is a V, right? Like, what? How could Adam be a V? Get it, Kappa? Anyway, the U is Eve, okay? So if you ever see like a jagged spike to the downside, then bounce the upside, that's your Adam. And then on the second bottom, you get the Eve. That means you get more rounded price action on your second bottom. This is one of your most common types of double bottoms, the Adam and Eve, but then you can have Adam and Adam, double bottoms. You can have Eve and Eve double bottoms, which is not that great. And you can, whatever. You can have Eve and Adam double bottoms, right? You can have all the different combinations, but the strongest one's Adam and Eve. And preferably, you want a slightly lower low double bottom, because those perform the best if they ever get confirmation of a breakout from that, that pinnacle. Okay, so that was it on Adam, or the double bottom, whatever. Inverse head and shoulders, right? Momo shift. This didn't really work out. I think we hit it after like it just crapped around and then ran up and then dumped. Well, I think you finally hit target, but it was after way too much craziness and didn't work out. It looks great now, right? It was just beginning to happen. It was like the engine or something. God, S-coin. Okay, so characteristics of the inverse head and shoulders. The left shoulder, right? A low, and then your lowest low, and then you rally. Okay, and after your first low, the left shoulder, you create the first part of the collar. Okay, that's what we call the first part. It's like your first trend line, your first anchor point of the trend line that could be horizontal, it could be down sloping, could slightly be up sloping. Okay, it's fine. So the collar is created here after this first low, then the head, and you rally up, create the second collar of the neckline. Okay, you have to have that, two discernible peaks to give you the neckline, and then you sell off again only to make a higher low than your previous low, which is great, man. That's momentum shift, accumulation, very good things when this occurs, when you see this. Divergence to boot, man. Divergence really helped on this one. Look, you had a low on price, then you had a lower low on price with higher levels of relative strength. That's very good, man. Coinciding variables. Let's go, right? That's what you're looking for. Okay, after you would break the neckline, if you did, and you could confirm, like with the candle closes above it and stay above this for enough time, the resistance measure move from the head to the neckline from the breakout, that's your measure move. Okay, sweet, man. Triple top, same thing, man. This is a huge one. This is the DAX. Left shoulder, head, double head, right shoulder, neckline, right? You got the collar of the neckline. And so once you broke it, this definitely made the measure move. I just don't have it pictured. I don't know, this is older Head and Shoulders, but it checks out. Okay, same thing, measure move from the top to the neckline from the breakout. That's how you measure the move. Pin it, it's like a form of consolidation. It's like a miniature triangle. It's just a little pause and an impulse, and the measure move's not nearly as large as the bull flag. So just from the tallest areas, from the bottom to top, from the breakout, is your measure move of the pennant. Very simple, right? Don't worry about that. Rectangle pattern, very simple. We just had one on Bitcoin. Oh my goodness, man. You can do a real world example now? Maybe? What's it doing? All right, give me a sec. Let's see if I still have it. I think I do on 60 minutes. Yes. Nice. All right. So your rectangle. Remember this? The bullish rectangle? Of course we had the measure move. We exceeded the measure move. Who cares, right? From the breakout, you hit the measure move and went a little bit above it. You almost doubled it, right? Who cares? But that's like how it works, man. The measure move is just there as understand, some sort of a guiding light. It's a tool. It's just like a way to measure if you're not using Fibonacci. You could use Fibonacci, high point to low point down there. I bet we hit a fib node. But we're not talking about that right now. We're talking about simple bread and butter patterns with measure moves. Okay, so good job, Bitcoin. Thanks for showing us due way. Look at us holding above the 20 moving average on 60 minutes. That's nuts, dude. All right, I digress. Where's the... Okay, rectangle, it's just like you want to have 2 touch points on each side. 1, 2 on the bottom, 1, 2 on the top. That's it. That's the criteria for it. It's just 2 parallel channels, 2 horizontal lines that are parallel. Okay, that's all it is. Rectangles form a consolidation. It's a bullish consolidation pattern after an impulse. After a bearish impulse is a bearish rectangle. Okay? Okay. Rising through valleys. It's really just it's a continuation pattern. All right, you have an impulse up, and then you sell off, then you rally, then you sell off again, slightly higher low. You rally again proportionately. Well, not really proportionally on the rise, but on the valley, you want to be proportionate. So pretty proportionate valleys there. Okay. The neckline, I guess you want to call it, or the critical resistance confirmation line, I guess, is that second peak. Okay, so, or the third peak, really, right? I mean, it started. This is how it started. Okay, so one peak here, your second peak. Okay, you get 2 peaks and then 3 valleys. So on the second peak, that's where you plot that horizontal line, confirmation line, and you go from the first valley all the way to the second peak, and that's what's going to give you the measure move of the breakout of this pattern. And look, obviously we went much higher. This was Bitcoin, man. All right. Okay. Rising wedge, dude. 2 converging upsloping trend lines with 5 touch points minimum. This was Activision Blizzard. Oh my god, man. It was so clear as day, like developing. Oh my goodness. And the whole market got destroyed too. This was right before Christmas, right? This was October to pretty much December. You lost like over half your value in a matter of a couple months or a few months, right? It was like $87 or $85 or something, all the way down to like $38, $39, dude. That dumpage. Okay, so take profit, especially when you see rising wedges on the daily time scale. Good God. Measure move, think about it. On this one, from the widest areas, tallest areas, from the low point to high point, you measure that from the breakout. Clearly we hit the measure move, didn't we? Yes, we did. Rounding bottom, I mean, you know, it really is just a testament to a shift in Momo. And look, you can draw a downsloping trend line right here, and you can see the bump and run too. Bump and run is just when you have 2 anchor points to, you know, a trend line, and then you break it, and you start rounding and making high. Look, a low, lower low, lowest low, slightly higher low, and then you're off. But then again, you could say, hey, bull pull, bull flag. Yep, that's okay. But this is normally how the rounding bottoms happen, and this is not really bullish. I mean, it is, but I'm saying, like, you normally don't. This can be a complete trend reversal. Okay, like the cup with handles, you're looking for the cup with handle to be like a bullish continuation pattern where you had a huge run and then you dumped, and then you kept running again. All right, no, I don't. You know, rounding bottoms, don't see them as often in this market, in the crypto market. I don't know. I don't see them that often. A lot of them are doing, you know, they do the same thing as the others. So, I mean, really, rounding bottom or not, man, like, you break down sloping resistance, we know that's like a breakout. So you don't even have to know the rounding bottom, right? You just know that you broke down sloping resistance. You're now making higher lows. You just can use critical thinking to understand why it's a good pattern. You know, you can identify, if you can identify the lows, the lower lows, the lowest low, then the higher lows. Very good stuff, man. Okay. Symmetrical triangle, 2 converging trend lines. Excuse me, man. Feeling kind of rough today. I've been feeling rough, man, past few days. Anyway, symmetrical triangle. You want to have 2 reaction highs We have 3 reaction highs. It's really 2 reaction highs, actually. And then, 1, 2. I mean, you can consider these more reaction lows, but a reaction high and a reaction low, they're different, where they, like, one will start here. Okay, it's not a reaction high until it hits the next low. All right, so once it hits this low, it is now a confirmed reaction high. So this is not a reaction low until we run up and hit this resistance, which we didn't even know is real yet. Okay, so once it hits this area here, then we now have a reaction low. And once you hit this high, you need to hit the bottom again. All right, you need to find a bottom. When you hit this bottom and you confirm a bottom, now you have a reaction high. So really, with this one, can you consider this an actual reaction low since it never hit that top trend line again? Maybe not, but does it really matter? It's the psychology of price contraction. You can clearly see after the fact, right? 2 touch points there. Okay, so, and then 3 touch points here. Still, to me, it seems like a really good looking pattern. Measure move was hit perfectly and went much higher, I think. This was, I can't even remember. There's so many symmetrical triangles. Broke out. All right. 3 falling peaks, falling 3 peaks, whatever you want to call it. It is the exact same thing as the rising 3 valleys, 3 rising valleys, whatever, where you have a peak, you sell off, form one valley, you rally again, you form another peak, then you sell off, you make your second valley, and then you run up and you make your third peak. All right, and remember how you get the measurement here, chat, patrons? From the high point, from the peak to the second valley, you measure that from the confirmation line, and then you measure, right? And that's your measure move. Clearly we hit it on this pattern, all right? So, triple top, okay? Now, it looks like an ascending triangle, doesn't it? Yes, it does, but look, that's why we have upsloping supports. All right, that's why we plot any kind of support. It could have been a higher low, it could have been the same low, it doesn't matter, right? If you get 3 tops like that, you break this neckline, you have confirmation that it is a triple top, right? It could have been an ascending triangle. It clearly could have been, right? But that's a lot of confirmation right there, man, that this is the top. And I'm kind of kicking myself. I did this for the sake of education and stuff. If I start bringing up oscillators and stuff, I don't know. I probably had bearish divergence and stuff. You got to be looking out for that divergence. And I think this was like forward or something bearish anyway, so it wasn't even like a real uptrend. It was like just a rally. You make your retraces after lower high. You make lower highs here than your previous highs way up here. Okay, so anyway, that's just not just one confirmation, that's 2 confirmations that this is the top. Okay, so anyway, that's it, man. That's all I got for you today. Just wanted to do some flashcards. I mean, this is probably one of the longest videos I've ever done, I think. But static videos, and this isn't even going on YouTube. This is just for patrons. So I hope you enjoyed this. Give me some feedback in Patreon chat and Discord or something, or just post it on the Patreon. I think it's like the, Patreon page or something. So hold on, what's going on? Bitcoin's 87.18. Okay, all right, y'all. Thanks so much. I'll talk to y'all soon. Till next time, respect the TA.